Welcome students, welcome. How are you guys? Welcome to this class of auditing of a new subject, that is auditing and assurance. So I am CA Ashish Behel. So in the coming days and weeks guys, we shall be studying this beautiful subject, which is auditing and assurance. So first of all, tell me guys, are you in examination preparation mode? Have you gone into examination preparation mode, or still not? Let me please let me know guys. Yes, good evening to everybody, to all of you. Siddharth, Aini, Shivam, I am getting your mails. Shubham, Deepika. Yes. So have you started studying from your module guys, of all subjects, of accounts, of law? Have you started your preparations? Please drop a mail. Are you in preparation mode, or still lazy? Please let me know. Okay. So guys, this subject auditing is a relatively new subject for all of you. You have not read it in your foundation or at your standard 12 level. So have you any idea guys, what is auditing? What is nature of auditing? What do auditors do? What is the function of an auditor? So have you any idea? Just intelligent guesses. You must be reading newspapers, you must be seeing TV news. Have you heard the word audit? Have you read about auditors in newspapers? So please tell me guys, what do you think auditors are supposed to do? What is nature of their job? Yes. So guys, you already know that financial statements of an organization are responsibility of the management of organization. The management of a company, the management of an organization is responsible for preparation of financial statements of that organization, of that entity. This you must have read in your accounts classes. So what is the final outcome of whole accounting process? Look guys, a business maintains lot of records, including accounting records like journals, cash book, ledgers. And what do these records are supposed to do? What is the purpose of these records? So that all business activities, all economic activities which are happening in that organization, in that business, are captured in those records. And what is the end process of all this exercise, of all this recording, which goes on throughout the year? Every day number of transactions are being recorded in the ledgers, in subsidiary books, in purchase accounts, in sales accounts, in expenses accounts. Now where does this process lead us to? So the final outcome of this process is preparation of financial statements, that is balance sheet and profit and loss account, cash flow statements, etc., which you have read about in your accounts classes. So number one thing guys, you have to remember that preparation of financial statements of an organization is the primary responsibility of management, of people charged with governance, who are responsible for running the affairs of the organization, who are responsible for running show of the company. Okay, so whose responsibility is to prepare financial statements? It is the primary responsibility of the management. Okay, then who will decide that financial statements have been prepared in accordance with relevant accounting principles, necessary accounting standards have been followed or not, whether these financial statements are free from errors or frauds, whether there are any misstatements, incorrect statements in the financial statements? Who would decide it? Who is responsible for it? Because management, you understand guys, management will always try to say that its financial statements show a healthy state of affairs. Okay, because no management would want to say that its financial statements are ridden with misstatements or errors or frauds are embedded in these financial statements. Okay, so here guys comes into role auditor's role. Okay, so here the auditor comes into play, and this is the, you can understand, this is the basic nature of auditing. So you understand guys what an auditor is supposed to do. I think we are still discussing it in very general terms. We will come to the definition and all those finer points later on. First, try to understand generally what an auditor is supposed to do. What is the nature of auditing? Okay, what are the broad functions of an auditor? Okay, guys, so you understand this point, that financial statements are prepared by the management, and it is auditor's responsibility to check whether these financial statements are free from errors or frauds, whether these have been prepared in accordance with accounting principles or not. So auditor has to certify these financial statements. So you can very well understand guys that how important role of auditor is, how important auditor's responsibilities are, because he is certifying financial statements of a company, of an organization, and he is shouldering a great responsibility because he is certifying financial figures. He is in a position to certify financial results of the company. What is the profit? What are the losses? What is the state of affairs of company's affairs? What is the position of assets and liabilities? Now all these things have to be certified by the auditor, and he has to give his report. He has to express his opinion whether financial statements are free from significant statements or not. Okay, so broadly you can understand what is the nature of auditor's work. Okay, guys, so you are clear what is the nature of auditor's work. So students, this subject, auditing and assurance, this subject from your point of view, from point of view of students, it is a theoretical subject. We would be learning theoretical framework while studying this subject, how an audit is conducted, how an audit is planned, how an audit is conducted, what are the procedures an auditor employs, how he collects audit evidence, and how he expresses his report. So, how he expresses his opinion and gives his report. So, all these things you would be gaining an insight in all these things during the coming weeks, and we shall be studying all the little finer points of all these aspects. Okay, guys, so you reasonably understand what we are going to study uh, in this paper, and what is the broad nature of auditing. Okay, guys. Is that clear to you guys? Should we move further? And guys, you have also to understand that auditing is one of the profession. Okay, so although a CA, although a chartered accountant, he performs many roles, but auditing is one of the traditional and basic core area of chartered accountancy profession, and big and every and almost substantial number of CAs are involved in the field of auditing. Okay, so therefore it is not only important theoretically, but it is also important practically. Okay, guys, so you can very well gauge the importance of this subject, not only from examination point of view, but also from practical point of view. And one more thing, guys, as regards structure of the paper is concerned, the paper is divided into 30 marks plus 70 marks scheme. That is, in 30 marks, you would be getting MCQs and 2 case studies, and 70 marks is theoretical descriptive type paper. Okay, so is that clear to you guys? Now we come to the definition of audit, which is in your module page 1. So what is auditing? Now here we come to the basic definition of auditing. Now what is auditing? Auditing, guys, it is an independent examination. Now important thing, independent. It means that it is not coming from within the organization. It is coming from a source which is outside the organization, who is not dependent upon the organization. Okay, so it is an independent examination of financial information of an entity. Okay, financial information, you know, everybody of you knows what is financial information. Financial results, all the information which is expressed in financial statements. Okay, so it is an independent examination of financial information of an entity, which may be profit oriented or it may not be profit oriented. Now there can be a case where an organization is working for profit, and there can be an organization which is not working for profit, say some trust or some NGOs. And size or legal form is also of no relevance, whether it is a small company, whether it is a large company, whether it is a company, whether it is a proprietorship firm, whether it is a partnership firm, it is a society or it is a trust. It doesn't matter. Okay, so we gather that audit is an independent examination of financial information of an entity, irrespective of its size and legal form, and irrespective of whether it is profit oriented or not. Okay, so when when such an examination is undertaken to express an opinion. So it is an independent examination, but it of independent examination of financial information of an entity when it is undertaken to express an opinion. Now, auditor expresses an opinion on the financial information of an entity, on the financial statements. He gives a report that he expresses an opinion, say if the accounts are okay, if these reflect true and fair view of the state of affairs of the organization, the auditor gives an unqualified opinion. If he finds something adverse, then he gives different kind of opinion. So all these things, different types of opinion, unqualified opinion, qualified opinion, these things we will be studying, guys, later on during coming weeks. So my request to all of you is not to rush not to panic, sir. These terms are not appearing in our module. What is the meaning? As the time progresses, you will automatically understand these terms. Okay. For the time being, kindly hear what I am saying attentively. Okay, guys. So is it clear to you? What is the meaning of, what is the definition of audit? Is that clear? So is that clear, or there are any queries? So let us see mailbox. What are your queries? Yes. Dhanalakshmi is asking, sir, what is the meaning of assurance? Now, Dhanalakshmi, assurance means to give comfort. Say in Hindi, tasalli dena, to give comfort. When the auditor gives his report, he assures the stakeholders, he provides an assurance to the stakeholders regarding the financial results, regarding the financial information of the entity of the company. Okay. So is that clear to you guys? And one more thing, as you would be reading from your module, guys, there is written essay. Many times everywhere you would find the name essay. So regarding essays, we would be studying in detail within this chapter. For the time being, you can understand that essays refer to standards on auditing. These refer to standards on auditing. Now, what are these standards on auditing? Basically, you can understand in simple terms that standards on auditing are standards which have been developed by ICAI to bring about uniformity in the way audit is to be conducted. So standards are many standards have been issued in relation to various aspects of auditing. So all these essays are also in your syllabus, and you would find reference to these essays in your module at n number of places. Okay. So many times the whole structure of one chapter is based upon that essay. So you understand what is essay. Essay is for the timing, you can understand that its meaning is standards on auditing, and these have been issued by ICAI to bring uniformity in the way how an audit is to be conducted by the auditors. So there are essays on many aspects. like regarding how an audit is to be planned, how what are the objectives of an independent auditor. First essay is essay 200 in this respect, regarding collection of audit evidence and all that. And there are many essays, so you would be studying as we progress in our syllabus. Okay, guys. So clear. So as per essay 200, guys, as per essay 200, overall objective of an independent auditor, the objective of an auditor, the objective of an independent auditor is to obtain a reasonable assurance. What kind of assurance? Reasonable assurance that financial statements are free from material misstatements, whether due to fraud or errors. So you would say, what is the meaning of reasonable assurance? So guys, when the auditor does his job and he is in the process of giving his opinion on the financial statements, he does not seek absolute assurance. He does not give guarantee that after he has signed his report, there would not be any errors or frauds in the financial statements. He is not seeking absolute assurance. What is the meaning of absolute? Absolute means total, perfect. कि अगर हम कहें सीए ने साइन करके बैलेंस शीट के ऊपर साहब इसमें कोई गलती नहीं हो सकती, सो ऑडिटर डज नॉट give this of opinion. He does not seek absolute assurance. He only seeks reasonable assurance. Okay, is that clear to you guys? So this is very, very important that an auditor seeks reasonable assurance, not assurance. There are two terms, reasonable assurance and absolute assurance. So the objective of an independent audit is to obtain a reasonable assurance. Reasonable assurance. So regarding what? So auditor किस चीज की assurance seek करता है? So the auditor seeks that financial statements on which he has to express his opinion, on which he is expressing his opinion, are free from material misstatements. Now, what is material? Now, this is another word. Material. What is material? Material means something important. You would be also studying this concept in detail in later chapters. There is a whole concept of materiality, but for the time being, you can understand material means significant, something important. Okay. So the auditor tries to see that financial statements are free from material misstatements, whether due to fraud or error. So there can be, guys, you have to understand two types of material misstatements. There can be mistakes, or you can understand misstatements in the financial statements. These can be either due to errors or frauds. Now, what is the difference between error and fraud? Can you tell? Can anybody tell what is the difference between error and fraud? Please let me know, guys. Just drop a mail. What do you think could be difference between error and fraud? Any idea, guys? Any idea? Many of you are saying there is disturbance in video. So I am asking the service provider to fix the issue. Yeah, guys, any idea? Yes. Now video should be fine, guys. So have you any idea what is the difference between error and fraud? Any intelligent guesses? What could be difference between error and frauds? Yes. Now many of you have answered correctly. Fraud is done intentionally, whereas error is unintentional. Error is unintentional, a genuine mistake. Okay. Whereas fraud is done intentionally, deliberately to achieve some purpose. Okay. So misstatements in the financial statements can be either due to error or these can be due to fraud. Okay. Clear to you guys? So the auditor, again guys, I'm repeating it because these things go till the very last chapter of auditing, and unless fundamentals are clear to you, you would not be able to attempt questions in the paper which are nowadays more practically oriented and more application oriented and case study based. Okay. So the auditor seeks to obtain reasonable assurance that financial statements are free from material misstatements, whether due to errors and frauds. Okay. And he has to express his opinion on these financial statements and communicate the same in accordance as required by standards on auditing, in accordance with these findings. So whatever he has found during the course of audit, he has to express his opinion. How he has to express? It is as is required by standards on auditing. What is prescribed in standards on auditing? He has to express his opinion in the manner which is required by standards on auditing, in accordance with these findings. So whatever are his findings, he has to take into account those findings and express his opinion on the financial statements as is required by standards on auditing. So is that clear to you guys? Is that clear? Please let me know. So while expressing opinion on financial statement, guys, the auditor also ensures that financial statements are prepared in accordance with applicable financial reporting framework. Now you have already read it in your accounts classes. What is FRF, financial reporting framework? So it is basically a framework in accordance with financial statements of an entity are prepared, like the balance sheet and profit and loss of a company are prepared in accordance with the requirement of Schedule 3 of Companies Act 2013. Okay. So this thing, what is the nature of auditing, what the auditor is supposed to do, what are broad contours of his duties, of his responsibilities, what is the objective of auditor? Is that clear? Any doubts, guys? You are free to write your mails. Okay, guys. So shall we move further? Now, students, you have to understand that what is the scope of audit, what an auditor is supposed to do. By scope we refer to what falls under the responsibilities of an auditor, under the duty, what falls under the duties of an auditor, or what does not fall under the duties of an auditor. Like an auditor is supposed, he is supposed to see that financial statements are drawn from the source data in accordance with financial reporting framework. So what is source data? Source data means raw financial information. What is appearing in the ledgers, cash book, journal of the company, of the entity. The same is summarized in the financial statements of the entity. Indirectly, you can say that financial statements have been drawn up correctly from the books of accounts of the company. Is that clear? So this falls within the scope of the audit. It is the auditor's responsibility to see, it is the auditor's responsibility to verify that financial statements are correctly drawn up from the underlying records, are correctly drawn up from the source data. Okay. Then the auditor also reviews the underlying accounting and control systems. Now, what are control systems, guys? Now, any organization cannot work, students, without a system of checks and balances. Like for all activities, there have to be certain controls that so that business of the organization is carried out effectively and efficiently. Like, say if the company is making some purchases, so company would want to ensure that no payment is made to fake suppliers, or the suppliers to whom payment is made, goods have been received from these suppliers, and quality goods which have been ordered, those are received. So these kind of things fall within the domain of internal control. So every organization, every company has to maintain a system of internal control so that all the activities of the organization can be carried on smoothly, can be carried on effectively and efficiently. Okay, so internal controls are there in every aspect. In every aspect of the organization, there are internal controls. There would be internal controls relating to purchases. There would be internal controls relating to sales. There would be internal control relating to system of inventories, and so on. There would be internal controls pertaining to fixed assets, so that small items are not taken away by dishonest employees. Okay, so there would be internal controls regarding cash, okay, regarding banking, regarding bank reconciliation. So all these things would be, all these system of checks and balances would be there in the organization. Now, how this is relevant for an auditor? You would say this is the part of management, but no. Although these controls are devised by the management, these are implemented by the management, but the auditor studies them. Auditor evaluates those internal controls to arrive at what? To assess risk. Say if the auditor finds that internal controls in the organization are working properly, these are satisfactory, then obviously his level of comfort will increase. Okay, so he would be placing a greater degree of reliance upon these controls. He would be getting better comfort from these controls. He would be saying, okay, I can rely upon these controls. These are satisfactory. So the financial information which is being produced in such an organization, that would also tend to be reliable. Okay, here lies the importance of internal controls. So it is auditor's job, it is part of his responsibility, it falls within the scope of audit that he makes an assessment, he makes an evaluation of whole accounting system and internal control system of the organization. Okay, okay guys, you understand what is the scope of audit, what is the broad scope of audit, and what is not the scope of audit. Say auditor, guys, you have to understand, he is not an expert. भैया वो कोई एक्सपर्ट नहीं है हर चीज के मामले में. से ही इज नॉट एन इंजीनियर. अगर किसी फिक्स्ड एसेट की क्या लाइफ होगी, क्या यूजफुल लाइफ होगी, ही इज नॉट एन इंजीनियर टू से अबाउट दीज थिंग्स authoritatively. Okay, this is the job of an expert. Okay, so these kind of things do not fall within the scope of audit. Okay, so what falls within the scope of audit, this we have discussed. Okay guys, so is that clear? Should we move further? Please let me know, guys. Please let me know, guys. Is that clear? So let us see your mails. So guys, you are understanding what I am trying to say. So I think from what you can I can gauge from your mails that you are very well understanding. So now, would you also like to read from module? Would you also like to read from module what we have studied, so that the things can be hammered into your mind? Okay, so we will also study from, we will see what does your module say now. Okay, so I am sharing the screen with you. So is the screen visible to you guys? Is the screen visible? Please let me know. Now, here we see the definition of audit. Now, an audit is an independent examination of financial information of an entity. Same thing which we have discussed, whether profit oriented or not, and irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereupon. Okay, so you understand that the organization may be profit oriented or not. It might be a company, it might be a firm, it might be an NGO, and whatever, it could be 1,000 crore company or it could be a small company. Okay, so clear. And objectives of audit. Now, what are the objectives of audit? As per SA 200. Now, what is this SA? This we have already learned. SA means standards on auditing. This means standards on auditing. Okay, so as per SA 200, overall objective of auditor are: number one, This is to obtain reasonable assurance. Now this is very important. To obtain a reasonable assurance that whether financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby which helps the auditor to express an opinion whether financial statements are prepared in all material respects in accordance with applicable financial reporting framework. Okay, clear? And second part is to report on the financial statements and communicate in accordance with the auditor's findings. Now the auditor has done his job. He has employed the audit procedures. Now finally what he has to do? He has to express his opinion and communicate the same in accordance with his findings. Okay, to the appointing authority. And one of the male Mr. Aitha, he is saying audit is done independently, independent examination, but why and where this is made and who authorizes? Say, you have to understand that auditor is generally appointed by the owners. He is generally appointed by the people who are charged with governance. Say in the case of company, the auditor is appointed by shareholders at AGM. Okay, so and it is an independent examination because if some examination is conducted by a person from within the organization, then its sanctity is lost. Since it is an independent examination, it is carried out by a person who is well versed in the field of auditing, who is a professional, who carries out audit in accordance with necessary professional skill and with professional expertise in accordance with the standards on auditing. Okay, and this person is an independent person, not from the organization. Okay, so independence of the auditor is very, very important because you understand that financial statements are relied upon by many persons. Like say a bank would be needing would be seeing financial statements which have been certified by chartered accountant, by the auditor of the company. So the bank would be making its lending decision on the strength of those financial statements. So if that person is not independent, then what is the sanctity of those financial statements? Now, here the concept of independence comes into play. Okay, guys. So you understand why the concept of independence is important and how important it is. So the objective of auditor is to obtain a what? Reasonable assurance, to ensure that, again, to reasonable assurance. Guys, again, mark these words. This is very important. Reasonable assurance. This is very important. It has to be distinguished from absolute assurance. The auditor seeks, he obtains reasonable assurance. Guys, do not forget it. It is very, very important. He obtains reasonable assurance to ensure that financial statements are free from material misstatements as a whole, in totality. He expresses his opinion on the financial statements in totality, not on one part of financial statements. In totality, he says, okay, I have verified, and these financial statements as a whole are free from material misstatements. And then he gives his report on the financial statements and communicate in accordance with these findings as required by standards on auditing, as required by SA standards on auditing. So clear to you guys? Now scope of an audit. Now the audit should be organized to cover all aspects of the enterprise, all aspects. And formation of an opinion, this is definitely falls within the scope of an audit. Okay. And what does he do? He studied all the internal controls and or accounting systems by employing tests and procedures. So guys, you have to understand that an auditor, he employs various kinds of procedures, audit procedures, to collect audit evidence, to obtain audit evidence. Like, say he might observe inventory counting process. Now this type of procedure is known as observation. He is observing some process being performed by others. Okay. Similarly, when he studies some documents, when he sees some documents, or when he visits some place, it is known as inspection. So these are examples of different kind of audit procedures. Okay. So one student is saying that what is the meaning of underlying accounting records? Now comparing the financial statements with underlying accounting records. Underlying means the records beneath, from the records from which the financial statements have been prepared. There must be some basis for preparation of financial statements. Financial statements are prepared from books of accounts. So underlying word is used in that context. Okay, clear? So, and also considering the judgments that management has made in preparing the financial statements. Now this is very important. So students, you must have learnt in your accounts classes that when financial statements are prepared, the management makes certain judgments. There are certain matters in which management may have to make judgment regarding, say, certain provisions. The management may have to make a judgment that how much provision of this thing has to be made in the financial statements to reflect true and fair view. Okay, so all these things, whether the organization is applying the accounting principles uniformly on a consistent basis or not, so these all fall within the scope of audit. Okay. However, as I have told you, auditor is not an expert. Like, he cannot be expected to perform those functions which fall within the domain of other professions. Like we had studied as in the case of an engineer. Okay. And constraints on the scope of audit. This is also important. What does constraint mean, guys? Constraint means, say if the management says that you are not supposed to do this thing, that we will provide you only these records and we will not provide these records. Constraint means limitation, rukavat. So if such type of constraint is there, okay, then which reduces auditor's ability to give an opinion, such constraint should be clearly set out in his report that when he would be giving his report, he would be saying that such a constraint has been imposed on my responsibilities, and he can give a qualified opinion. Now, many of you are saying, sir, what is unqualified opinion? What is qualified opinion? Again, guys, I would request you that all these things you would be learning, you would be studying as we move on. For the timings, you can understand then that an unqualified opinion means when the auditor gives a sort of clean chit to the company that financial statements show true and fair view. He gives an unqualified opinion. We say in auditing language that it is an unqualified opinion. When he gives his opinion with some qualifications, we say it is a qualified opinion. And when he says that he is not in a position to give his opinion, then it is known as disclaimer of opinion. Okay. Okay, guys. So is that clear? Is that clear to you? Now we will study various aspects of audit. Now aspects, क्या मतलब है इसका? aspects का क्या meaning है? aspects का aspects means it is related again to the scope of audit, that these kind of functions fall within the domain of an auditor, within the domain of auditing, and these kind of functions do not fall within the scope of audit. Aspects means you can say different facets, कई चेहरे, क्या क्या काम, ठीक है? तो these are again related to scope of audit, like we have discussed in scope of audit, that an audit conducts study of internal control. The auditor evaluates internal control system of organization. It is very well an aspect of audit. He studies accounting system and overall internal control system of an organization. Okay. So this is one aspect of audit. And what could be another aspect? He checks arithmetical accuracy of books of accounts. Obviously, bhai, if I am supposed to sign the balance sheet, if I am supposed to verify the financial statement, first thing which would be coming to my mind would be to check that whether financial statements are arithmetically correct or not. The balances are tallied. Okay, there are no clerical mistakes. All the figures data are arithmetically okay or not. So this is the minimum basic thing. This is the minimum first step that an auditor has to ensure. Okay. He would also ensure that all the transactions which have been thrown up in the financial statements, which are reflected in the financial statements, these are genuine. Okay, these are genuine, these are valid. So checking the authenticity and validity of transactions during the year is also one of the aspects of audit. Okay, so is that clear? And another aspect of audit is proper distinction between capital and revenue expenditure. I think this you all must be knowing. What is capital expenditure? What is revenue expenditure? Do you know, guys, what is capital expenditure and what is revenue expenditure, or do you want me to explain to you? Please let me know. Please let me know, guys. Yes, guys. Do you know what is the difference between capital expenditure and revenue expenditure, and why it is important? Why it is important? Or if you do not know, then please drop mails so that I can explain to you. But I sincerely hope that most of you or everybody of you must be knowing about capital and revenue expenditure, because it is there in your class 12 level also, and you must have studied in your foundation exam also, in your foundation syllabus. So what is the difference between capital and revenue expenditure, and why this distinction is important? Please tell me why this distinction is important. Why an auditor is supposed to check that any expenditure is correctly classified as capital expenditure or revenue expenditure. What is the significance of this aspect? Yes, students, I am waiting for your mails. Please let me know. Few people have given the answer, but some are saying explain. So guys, I'll explain. Okay, I'll explain. So capital expenditure, guys, you can understand that capital expenditure is an expenditure, the benefit of which is not consumed or expended within 1 year. Within a year, its benefit is not expended within a year. It goes on for a number of years. Like, say, if you purchase a machinery, if a company has purchased a machinery, the machinery would be capitalized. Capitalized means it would appear in the asset side of the balance sheet. Okay, it is not an expense of that year. Why? Because from that machinery, the company would be producing some output, some goods, and the benefit of that machinery are not limited to one single year. These would be spread over a number of years. So clear? And what is revenue expenditure? So revenue expenditure is one, the benefit of which is exhausted within 1 year. Say some machinery part is replaced by the company. Some oil is routinely put into the machinery to keep it in the running condition. So what kind of expenditure is it? It is a revenue expenditure. It would be shown in the profit and loss account as an expense. It would be reduced from profits. Okay, it is not shown under assets. So you understand why this distinction between capital and revenue expenditure is important. See, if revenue expenditure is capitalized, if machinery repair expense, which should have been charged to profit and loss account, it is debited to machinery account, then what would happen? What would happen, guys? What would happen if the machinery, if some items of machinery repair account, these instead of being debited to machinery repair account are posted to machinery account, then what would happen? Drop your mail. What would be its effect on profits? What would be its effect on profits? Drop your mail. Yes. So my question to you is, if machinery repair expense, instead of being debited to machinery repair account, is debited to machinery account, what would be effect on profit? What would be its effect on profits? Yes. So profits would be increased because some item which should have been charged to expense, it has not been charged to expense, and it would lead to overstatement of profits. Okay, and assets would also be overstated because this item should have gone to expenses and it should have reduced profits, but this item has been posted to assets, so assets would be overstated. Say similarly, if some machinery item, it should have gone to machinery account, but it has been shown under machinery repair account, then what would happen? The expenses would increase, the machinery repair account would increase, consequently overall expenses would increase and profit would be reduced. Okay, and assets would be, machinery would be understated. Okay, so that is why students, distinction between what is capital expenditure and what is revenue expenditure, it is very important because it has direct bearing, it has direct impact on the financial position of the company, on the financial position of an organization. So is that clear to you guys? So let me ask you a question. Say the company has purchased a machinery. The company has purchased machinery of say 50 lakhs. Now the company's plant is at Noida. Okay, and the machinery is coming from say Coimbatore to Noida. So the company has incurred freight expenses of say 1 lakh rupees from Coimbatore to Noida. So what kind of expenditure is this? Is this a revenue expenditure or is this a capital expenditure? Drop your mail, guys. Is this a capital expenditure or is this a revenue expenditure? Should it go into the profit and loss account or should it go into the machinery account? And why it is so? Please tell me, guys. So let us test your IQ, what you have studied in your accounts. You understand my question? Yes, only one mail till now, Himanshu Gupta. Only Himanshu Gupta has responded. What about others? So guys, you are understanding. I think you are understanding what I am trying to convey to you, and you should be enjoying the lecture. This is my perception. Yes. Now I have got many mails. Most of you, rather many of you have written it correctly that it is a capital expenditure because all the expenses which are related to the acquisition of a capital asset, which are related to the purchase of a capital asset are part of the capital cost of that asset. It is not that I would debit 50 lakh in machinery account, but freight amount would be debited to profit and loss account. This would be a wrong entry. Okay. So because all the expenses which are incurred by an organization to bring the asset to its location are necessarily capital expenditure. Okay guys, so well done, keep it up. So we now understand, students, that distinction between capital and revenue expenditure is important for an auditor because it has a bearing on the financial position, it has a bearing on the profit or loss of the company. Okay. And another thing, guys, there is that when an auditor expresses opinion on the financial statements, he has also to verify all the transaction, all the assets and liabilities of the company. Now here we come across a term, assertions. Assertion. So you would be studying about this term assertion later in chapter 3 on audit documentation and audit evidence. But for the time being, we will try to understand in very general terms कि भैया assertion का क्या मतलब है, what is the meaning of assertion. So I will not try to explain to you technical meaning of assertion. I will give it a passing reference because we will study again it in chapter 3 in very detailed manner. However, we shall try to understand the meaning of assertion in a very general way. Say in the students, in the balance sheet of an organization, there are different items in the liability side, different items in the asset side, and there are different heads of accounts in profit and loss account. There are sales, there are other income, there are purchases, wages, power and fuel, and other sort of expenses. Now, when we say, when in financial statements say there is a figure of purchases of 50 lakhs. So what does this denote? इसका क्या मतलब है? What does this denote? This denotes that the company has made purchases of 50 lakhs during the year, and goods in respect of these purchases were received by the company. Okay, purchase हुई and the company made purchases, and corresponding to these purchases, obviously goods should have been received by the company. These must the stock of the company must have increased by rupees 50 lakhs by making those purchases. These purchases must be in the name of the company because these are recorded in the financial statements of the company. And these purchases must relate to the accounting year for which financial statements have been prepared. अरे कि अगर मेरी बैलेंस शीट में मेरे प्रॉफिट एंड लॉस में 50 लाख की परचेज आ रही है से फाइनेंशियल ईयर 21-22 की, तो वो सारे बिल्स फाइनेंशियल ईयर 21-22 के होने चाहिए. सो ऑल दीज थिंग्स इन ऑडिटिंग लैंग्वेज we call as assertions. What we call as assertion. Assertion का बेसिकली हिंदी मीनिंग होता है टू assert, टू कहना, टू say something. So what are assertions? Assertions are representations by management. So when the financial statements say state purchases of 50 lakhs, it means all these things which I have told you. So necessarily all these things are not explicit. All in profit and loss account you would only see figure of 50 lakhs. बट लेकिन इसका मतलब क्या है कि 50 लाख के अगेंस्ट गुड्स भी आए होंगे, ओके, स्टॉक भी बढ़ा होगा, तो ये सब एसर्शन क्या है? इम्प्लीसिट. सो देयर आर टू वर्ड्स, एक्सप्लिसिट और इम्प्लीसिट. एक्सप्लिसिट मींस व्हाट इज स्टेटेड एक्सप्रेसली, जो सामने लिखा हुआ है, व्हाट इज स्टेटेड एक्सप्रेसली. एंड व्हाट इज द मीनिंग ऑफ इम्प्लीसिट? इम्प्लीसिट का मतलब है जो उसमें छुपा हुआ है, जो हिडन है, जो एम्बेडेड है. सो as we have learned from this example of purchases, assertion can be explicit or implicit. These need not be necessarily explicit. These can be explicit or implicit, and these are representations by whom? These are representations by management. Because why these are representations of management? Tell me, क्यों ये representation है management की? Why these are representations of management? Why assertions are representations of management? Because financial statements have been prepared by the management, because it is the primary responsibility of management to prepare financial statements. Okay, that is why we say that assertions are representation by management, whether these are explicit or implicit. Hope you understand what we mean by explicit or implicit. You understand what is the meaning of explicit or implicit? So I will give you another example. Say बिल्डिंग अकाउंट में, फाइनेंशियल स्टेटमेंट्स में बिल्डिंग का बैलेंस 10 लाख रुपए आ रहा है. बिल्डिंग बैलेंस इज 10 lakhs, ओरिजिनल कॉस्ट इज 10 lakh, लेस डेप्रिसिएशन अप टू डेट इज 1 lakh, एंड WDV is 9 lakhs. So what is the explicit assertion? That building value is rupees, WDV of building is rupees 9 lakh. And what is not written is that building is in the name of the company. तभी तो बैलेंस शीट में आ रही है. That is why the balance of building is coming in the financial statement, because it is owned by the company. That is why it is being reflected in the financial statements. But it is not written. It is implicit. It is implicit. It is hidden. It has to be understood. So guys, you understand what is the meaning of explicit and implicit. Similarly, we can say that since depreciation has been charged, it means that building has been used by the company for its business. So this is also another implicit assertion. So you understand what I'm trying to say. So please let me know, guys, whether this thing is clear to you. Explicit and implicit. Okay. So assertions are representations by management which may be explicit or implicit, and these are used by the auditor to identify any potential misstatements. Now, whatever the financial statements say we take the example of building. Building is appearing in the balance sheet. So the auditor would say that show me the title deed, whether the building is owned by the company, since it is coming into your balance sheet. So this way he is verifying the title of the balance sheet. He can go to that building and he can inspect the building. This is another means of verifying the existence of that assets. So these are kind of assertions. These are, in auditing language, these are called assertions. We shall be studying different type of assertions later in chapter 3. So but generally you should have by now understood what is the meaning of assertions. Please let me know, guys. Okay, so the auditor, we were discussing aspects of audit. So the auditor is supposed to verify the title existence of assets. Similarly, all the assertions in respect to liabilities have to be checked, have to be verified by the auditor. Okay, similar is the case relating to transactions. Okay, so guys, you understand what is the meaning of assertions? Ayush is saying, sir, what assertion? He is writing some spelling. Ayush Agarwal, assertion means it is derived from word assert, 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 and assertion, ASSERTION. So I'll show it to you in your module also. So here is the meaning of definition of assertion. What is assertion? This is the word, guys. Assertion means it refers to representations by management. Remember, it is very important. Assertions are representations of management. Management is saying this thing or that thing. That financial, if building is appearing in financial statements, that statement is made by management. This statement is not made by the auditor. Okay. Explicit or otherwise. Explicit or otherwise. Otherwise means implicit. That are embodied in the financial statements. Embodied means which are present in financial statements as used by the auditor to consider different type of potential misstatements that may occur. Because if figures are reflected in the financial statements, then these all figures are assertions by the management. These assertions might be explicit or otherwise, these might be implicit. These are in the financial statements. However, these assertions are verified by the auditor. These are checked by the auditor to see what could be the misstatement, where could be error, or where could be fraud. Okay, okay, guys. So you understand. So I think you have got a broad idea of what is meant by assertions. No, Alok Kumar Chaudhary, you are saying assertions are the documents. No, Alok, you are tuning wrong channel. Sorry, assertions are not. These are statements, or you can say these are representations as reflected from financial figures. These are not documents. Assertions are representations by management. These can be explicit or otherwise. These are present in financial statements. Whatever figures are there in financial statement, these are all assertions. Say if the profit and loss account says sale of 10 crores, then it is an assertion by the management that so much sales have taken place. This is an explicit assertion. And that another assertion is that if the sales of 10 crore have taken place, that then goods of so much value must have moved out of the factory. These goods must have belonged to the company. That is why it has sold. That is why the company has sold. That is why it has shown it in the sales account. Similarly, if some asset is appearing in the balance sheet of the company, then the company is making a statement. The company is making an assertion with regard to its value, with regard to depreciation charged, with regards to written down value, and implicitly with regards to its title. If the machinery is appearing it in the balance sheet of the company, so it means that the bill must be in the name of the company, that the company owns that machinery. So this is the meaning of assertions. Okay, so I think Ayush, Alok Kumar Chaudhary, you have understood what are assertions. I think you must try. If not, you have not understood completely. You just try to understand what I have said. Okay. And now we come to another point. Students, you have to understand that it is not necessary that an audit is always prescribed under law. Look, sometimes the audit is prescribed under law. The law says that accounts of this organization has to be audited. Say, we know that in case of a company, Companies Act requires that accounts of a company have to be audited by an auditor. So this is the mandatory requirement of law of Companies Act 2013 as regards companies are concerned, that accounts of companies have to be mandatorily audited by an auditor who has to be a chartered accountant. Okay. Similarly, under Income Tax Act also, certain assessees are required to get their accounts audited. Say, if the turnover of some person exceeds 1 crore, then he has to get his accounts audited from an auditor, from a chartered accountant. Okay, so it is another example where audit is prescribed under law. Okay, it is another example where audit is mandated under law. That law has prescribed that accounts have to be audited. Okay, however, there can be some cases where audit is not prescribed under law, but some organizations they might be getting audited, getting their accounts audited on their own, on voluntary basis, or for some other purpose, like say in case of schools. Say in case of schools, the internal rules of school might state that the accounts need to be audited, although there might not be any law in respect of that school. Okay. Similarly, in case of an NGO, there might be their internal rules might state that accounts have to be audited because they might want to take some grant from the government for which audit is necessary. So therefore, guys, you have to understand that it is not necessary that audit is always compulsory under law. There can be situations when an organization might get its accounts audited, although there is no legal requirement to do so. Say if I am a small proprietorship firm, or if I am a small partnership firm, but the law has not made it compulsory for me to get the accounts audited, even then the partners may decide to get the accounts audited to know the actual the profit position of the firm. So so you have to remember that it is not necessary that audit is mandated under law always. Although in some cases, just as we have considered in case of a company or in case of some persons, as required under income tax law, audit is necessary if their turnover exceeds a certain amount. Okay. However, even though it is not compulsory for some organizations to get their accounts audited, they may opt for getting their accounts audited voluntarily. There is no bar, there is no limitation, there is no hindrance to it. Okay. So is that clear? Now Sri Nagalakshmi is asking what is potential misstatement. Now potential misstatements are, say, you have to understand that there are many representations by management in the form of assertions. So the auditor, while verifying those assertions, he sees that where this assertion can go wrong. Okay, where whether it is prone to error or fraud. Okay, so these are examples of potential misstatements. He sees those assertions, and from those assertions he can form his opinion on possible misstatements, on possible error or frauds which might occur. Okay, so these are of use to auditor. So basically you can understand that assertions are a sort of theoretical framework, for study in auditing. Okay. Okay, Dhanlakshmi, Nagalakshmi, sorry. So guys, at this stage, we'll be taking a break of 10 minutes. So see you after 10 minutes. Okay. So break of 10 minutes. Yes, welcome back, students. So, students, now we come to what can be the advantages of audit. So, what are the possible advantages of an audit? So, students, you understand that audited accounts, audited financial statements are used by a host of stakeholders. Say, audited financial statements can be used by bankers. The bankers may base their decision to lend to the company or not to lend to the company on the basis of audited accounts. Okay, so this is one of the advantage of audit. Similarly, audit acts as an appraisal function. Now, what is an appraisal function? Appraisal means to review something. That an auditor, as we have learned before, that an auditor has studies the control system of an organization and points out its weakness. So, in this way, the audit is an appraisal function. Now, what does appraisal means? Appraisal means to review, to appraise something. Like in case of employee appraisal, we say that so and so employee has performed well or not. Similarly, an auditor appraises the overall system, overall control system of an organization, and then expresses his opinion. So there can be n number of advantages, students, from the audit. Like say in case of some trade dispute, the audited accounts can be helpful between the quarreling partners to settle their accounts. Or say if some insurance claim arises, some property has been destroyed, say in fire of a company, then the insurance surveyor and the company, they may rely upon the audited accounts for a variety of things, for determining the quantum of loss to suffered by the company. Also, one of the very important advantages of an audit is, students, that it acts as a moral deterrent. It acts as a moral check on the employees. Say employees को लगता है कि audit होगा, so obviously some way down the line they may fear that their wrongdoings might be caught. So it acts as a check. It acts as a moral check on the employees that their wrongdoings might be caught. So they might fear while committing a fraud, because it may be pointed out by an independent audit. So these are kind of advantages which can flow from audited accounts. Similarly, not the least, audited accounts are basis for determining tax liabilities. Obviously, you know that a company pays its income tax on the basis of financial results shown by audited accounts. Okay, so obviously audit is a tool which helps the government and government to determine the correct amount of tax of different assessees. So this way you can think of n number of advantages which can flow from an audit, from an audit conducted by an independent person who carries out independent examination of financial information of the company and gives his opinion. Okay, so audited financial statements are helpful. This you can very well understand from the nature and objectives of audit itself. Okay, now we come to another important topic, that is inherent limitations of an audit. Inherent limitations of an audit. Now, what do we understand by limitations? Limitations means that ये audit ये नहीं कर सकता. Limit inherent means which is coming from within. So inherent means which is coming from within the process, which is intrinsic, जो उस चीज के अंदर से आ रहा है. और लिमिटेशन मीन्स उसकी मजबूरी. यू कैन अंडरस्टैंड इन हिंदी. ओके, सो व्हाट आर द इनहेरेंट लिमिटेशंस ऑफ एन ऑडिट? सो गाइस, फर्स्ट ऑफ ऑल you have to understand that there is always a risk of failure of an audit. So what do we mean by failure of an audit? By failure of an audit, we mean to say that an auditor gives incorrect opinion. Say there are misstatements in the financial statements. The financial statements, there are errors in the financial statements, or certain figures are misstated in the financial statements due to errors or frauds, or due to both. Due to errors or frauds, in such a case, the auditor should not give an opinion that financial statements give a true and fair view. He should give a qualified or disclaimer. But in such a case, the auditor wrongly gives an unqualified opinion. Say, this is what we say as the audit risk. This is what is it is the meaning of audit risk. Risk of failure of audit. Risk that an auditor expresses an inappropriate opinion that financial statements are not misstated, whereas actually these are misstated. Okay guys, so you understand what we know, what we mean as by audit risk. Again, I am telling you, we will be studying this concept in greater detail in chapter 4 on risk assessment and internal control. However, for the time being, we can understand this much. Now guys, you have to understand that audit risk cannot be reduced to zero. Very important. Audit risk cannot be reduced to zero. Now, why it is so? There would always be some audit risk. There would always be risk of failure of audit. There would be always be risk of an auditor expressing an inappropriate opinion that financial statements are not materially misstated, whereas actually they are materially misstated. Now why this risk is never reduced to zero? You have to understand that audit risk is never zero. Now why it is so? It is so because of many reasons. Now one of the reason is nature of financial reporting. Say you understand that while financial statements are being prepared, management makes a lot of judgments, and management is making application of a lot of accounting principles. So in judgmental matters, there is always a possibility that certain information is not presented properly or the management has made wrong judgment. There is a possibility of subjectiveness. There is a possibility of discretion in these things. So because of the nature of financial reporting, or there might be some case that financial statements have to be prepared in accordance with the reporting, in accordance with some reporting framework, and that reporting framework does not require some things to be stated in accordance with that FRF, in accordance with that financial reporting framework. So this might lead to certain inappropriate conclusions by the auditor, and he might give a wrong opinion. He might express an inappropriate opinion. That is why we say that some audit risk would always be there. Now, this is one of the inherent limitation of audit. Why this limitation arises? Due to nature of financial reporting. Because nature of financial reporting is such that there would always remain some risk that there would always remain some possibility that auditor might express an inappropriate opinion. Okay, guys, so you understand. Similarly, another reason of the limitation of the inherent limitation of audit is the nature of audit procedures. Guys, you would understand, you would study in subsequent chapters that auditors does not carry out a 100% checking. He does a sample checking. He does a test checking. He collects a sample on the basis of some methods which are which have been derived statistically, but he is not carrying 100% checking. He is not carrying out 100% checking of every transaction. So there can be a possibility, there would be a possibility that some of the errors might remain unnoticed despite him having taken out a sample scientifically or statistically. He might not be able to find out those errors. So these are the nature of audit procedures. By the very nature of audit procedures, the inherent limitation of the audit arises. Okay, and guys, you have also to understand that audit is different from investigation. Now, one term is audit, another term is investigation. Now, these two terms are not same. You have to clearly understand the difference between two. Now, what is the difference between audit and investigation? Now, when we say investigation, investigation means that the person doing investigation, he starts work with this notion that some wrong has been done, that some wrong has been committed. Say the management feels that in some department fraud has been conducted, so he may appoint some investigator to see whether fraud has been conducted and what is the quantum of that fraud, who is responsible for that fraud. So here the management is making a presupposition. The management strongly suspects that fraud has been conducted, or somebody else might suspect that fraud has been conducted. So this is the nature of investigation. But auditor does not presuppose that some wrong has been done. Auditor proceeds on a normal basis, and during the process of checking, the auditor might come across something which arouses his suspicion. He might see that there is a possibility that in in this area some fraud has been committed. So the basic purpose of audit is not to dig out frauds, but it is to examine the accounts and express his opinion in accordance with essays. And during the course of this, on the way, if he discovers some wrongdoing, if he discovers some fraud, then it is a different thing. During normal course of verification, during normal course of checking, he might come across a certain fraud, but he does not start his work with a with a presupposition, with a notion that fraud has been committed. Okay, but after, during the course of his audit, when he is employing different procedures, he might come out with some fraudulent acts, with some things which are fishy. So that is the difference between audit and investigation. So it is also one of the limitations of an audit, that audit is not an investigation. Its nature is such that its scope is such that it does not start with the thought that some wrong has been committed, whereas investigation starts with the thought, it starts with the investigation that some wrong has been conducted, some fraud is there, and we have to find out that. Okay, that is why we say that an audit does not give 100% guarantee, that audit does not give 100% guarantee that there are no frauds in the audited accounts, that there are no errors in the audited accounts. There can be errors, there can be frauds, even though the accounts have been audited. But the auditor has to show that he has conducted the audit in accordance with standards on auditing, by employing all his professional expertise, professional skill and care. Okay, guys, you understand? So this also is one of the inherent limitations of audit. Now, another inherent limitation of audit could be that fraud might be conducted by the management itself, that management itself is involved in committing a fraud. So when management itself is involved in committing a fraud, then it might be very difficult for the auditor to dig out those frauds, because in these kind of frauds, these might be planned very carefully, very thoughtfully, and auditor is seeking information from the management. So if the management itself is involved, if the higher ups in the management themselves are involved in committing a fraud, so it might be difficult for the auditor to dig out those frauds, and financial statements could be prone to misstatements in this way. So this is also one of the inherent limitations of an audit. Okay, guys, you understand? Is it clear to you? Yes, Himanshu is saying, sir, do ask some MCQs. Himanshu, your wish could be fulfilled. Definitely, we will be doing some MCQs. Do not worry. So you understand limitations of an audit, students, and other factors. There could be some other limitations of an audit, like we can say, there might be some transactions with some related parties. Related parties, you understand that there might be transactions with some other companies who have who have a interest in the auditing company, in the auditing client, and the auditor might not be knowing such relationship. Okay, so some non-genuine transaction might have been made by the management. So these might be difficult for the auditor to trace out. So such kind of things could be there. And another thing, guys, you have to remember is that when an auditor conducts audit, then he has not to omit any audit procedure which he is required to employ, merely because that it is very costly or time consuming. He has to conduct the audit by employing his professional skill, by employing his professional expertise in accordance with standards on auditing, in accordance with SCs. Okay, so clear. And you have also to remember that during say is an auditor firm is conducting audit of a company for 3 years. Then in the fourth year, the auditor might become little more comfortable. He might say that he has been taking out this information since last 3 years. चौथे साल में भी ठीक होगी. But the auditor, you have to realize that reliability of an information decreases over a period of time. ओके जो चीज 2 साल पहले थी जरूरी नहीं वो चौथे साल में भी ठीक हो. सो द ऑडिटर हैज टू स्ट्राइक ए बैलेंस बिटवीन द reliability of information and its cost. Okay guys, so you understand what are the inherent limitations of an audit. And again guys, you have to hammer into your minds, audit is not always foolproof. You have to be very clear that even after an audit has been conducted, there can be a possibility of misstatements in the audited accounts in the form of errors or frauds. It is quite possible. Audit is not a guarantee. Again, remember, objective of auditor does not seek absolute assurance. He seeks only what? He seeks only reasonable assurance. He seeks only reasonable assurance. Okay, is that clear to you? So let us see what is there in your module. Now, types of audit. This is very general thing. Audit required under law in the voluntary category. Okay, so there is nothing special in it. Now, advantages of audit of financial statements. These are also very general things. It safeguards the financial interest of persons who are not associated with the management. Like we had seen, bankers, financial institutions, shareholders, public at large. These are relevant to everybody. Audited accounts check as moral check on employees. They know that audit would be conducted after year end, so it would act as a deterrent upon them. Audited financial statements are helpful in settling liability for taxes like income tax. We have already seen. Okay, they are also useful for settling what? Trade disputes. Okay, and in respect of damages suffered by property, like I had given you an example of insurance claim. Say if some insurance claim has occurred, then the loss assessor can see, he can rely upon the audited accounts, and audit can help in detection of wastage and losses. It's very general. Audit is an appraisal function. Audit reviews the existence and operations of various controls in the organization. Okay, appraisal function. Audited accounts help in the settlement of accounts at time of admission or death. Government may require audited financial statements. So these are very general points. Yes, Ayush, auditors are not investigators. You are right. Investigation is a specialized field, and auditor is not an investigator. Auditor is not a bloodhound. Auditor is a watchdog. He is not a bloodhound. Okay, he does not start his work with the notion that there is something wrong. He plans his audit, he performs audit procedures, he carries out audit procedure, performs tests, inquiries, he does work in accordance with standards on auditing, he employs his professional skill. On the way, if he discovers some fraud, he reports. It is his responsibility to report. But the main purpose of audit is not to discover fraud. Incidental purposes. On the way, if he comes to discover something, then he has to report. Okay, so that is the difference between audit and investigation. Deepika is asking what is the meaning of defalcation or embezzlement. Embezzlement, Deepika, means chori karna. Somebody embezzles cash, or defalcates cash means takes away the cash. Okay, is it clear? So inherent limitations of audit. Now this is very important. This I have already discussed. This is very important. The auditor is not expected to and cannot reduce audit risk to zero. Very, very important. The auditor is not expected to, neither he is expected to nor he can. He cannot reduce audit risk to zero and cannot therefore obtain absolute assurance that financial statements are free from material misstatement. This is because there are inherent limitations of an audit. What are those limitations? Limitation due to nature of financial reporting, because it involves judgments. Okay, nature of audit procedures. The management may not provide information, complete information. The auditor does not carry out 100% checking. It may involve fraud by the management itself. So when the management is itself involved in fraud, then how it would be very difficult for the auditor to dig out those fraud. And an audit is not an official investigation. This is also very important. Auditor is not an official investigation. What is the difference between audit and investigation? This is written in bold letters here. We have already discussed. What is the difference between audit and investigation? This is again very important. Mark it, very important. It is also written in bold letters here. Okay. And again, timeliness of financial reporting and balance between benefit and cost. If the audit procedure is difficult, then auditor has not to omit it. He has to perform the procedure, however difficult it may be. It means he has to perform that procedure. Okay, and other factors like there might be frauds by senior management, so it might be difficult for the auditor to detect. When senior management is involved, so it might be difficult for auditor to detect. Okay, related party relationships, non-compliance with laws, such things. So these are inherent limitations of audit, and Here there is again some simple problems and summary of what are the inherent limitations of an audit. Now students, now I think we should take some MCQs of what we have studied. Are you ready? Are you ready for MCQs? Are you ready for MCQs, guys? Please let me know. Yes. So these are not MCQs, but these are 2-mark question. Question number 1, guys, in the subjective paper is compulsory. So it contains 7 questions of 2 marks each. Now you have to remember that you have to state whether these are correct or incorrect along with reasons. So that is very important. Say if in the exam you do not write the reason, you would be getting 0 marks. You just write correct, you would get 0. But if you write why it is correct and your answer is right, then you would be getting full credit. Okay. So what is the question number 1? Assertions are representation by auditor to consider different type of potential misstatements. Now whether this statement is correct or incorrect, tell me. Tell me, I am waiting for your mails. Assertions are representations by auditor to consider different type of potential misstatements. Whether this statement is correct or incorrect. Dhanlakshmi is asking who is engagement partner. Dhanlakshmi, we would be coming it later on. Engagement partner is partner who in the audit firm is conducting audit, who is responsible for conduct of audit. Okay. So whether this statement number 1 is correct or incorrect. Assertions are representations by auditor to consider different type of potential misstatements. So guys, my request to you is when you are doing correct, incorrect type of questions, study the statement carefully, word by word. Please study the statement carefully, word by word, then give answer. Only 5 mails I have got till now. Sneha Garg, Mukta Vyas, Tanya, Himanshu Gupta, Akash, Neil, Kiran. What about others? Guys, you have also to state the reason. Remember, you will not get any credit in the exam if you do not give the reason. So assertions are representations by the auditor to consider different type of potential misstatement. Yes, the answer to this is this statement is incorrect. Why? Why it is so? Why it is incorrect? Assertions are representation not by auditor. These are representations by management. Many of you have answered correctly. So congrats to those who have answered correctly. Assertions are representations by management. These are not by auditor. These are used by auditor. Again, guys, and some Hitesh Jain had asked me a question whether we can write the paper in our own language. Yes, Hitesh, you can write, but in technical papers like in auditing, you have to remember the keywords. Say the if if you do not remember the definition of assertions or meaning of assertion, then you would write it completely wrongly. There would be no time in the exam to make your own words. So you have to express your thoughts, your opinion in your own words. But as far as technical things are concerned, you have to remember these. Okay. So it is only when you remember the meaning of assertion, that you would be able to attempt these type of questions. So assertions are representations by management, and by whom these are used? These are representations by the management, but these are used by the auditor. Okay. Now second question. Audit of an entity is necessarily mandated under law. Now tell me whether this is correct or incorrect. Waiting for your mails. Second question, guys, whenever you are sending answers, do write question number also. Do write question number also. Yes, audit of an entity is necessarily mandated under law. Is this, what is the answer? Is this correct or incorrect? Now here the answer is incorrect. Why it is incorrect? So the word here is written necessarily. Again I am saying you have to read the statement, guys, word by word. Every word you have to read. Although audit of an entity, it can be mandated under law, but it is not necessarily mandated under law. So this word is wrong. It can be required by law or it may not be required by law. It may be voluntarily. Like there is some NGO which might require which might require to get its accounts audited voluntarily, or there might be a small partnership firm which might require to get its accounts audited voluntarily to know its true profits. So this statement is also incorrect. Okay. So even this type of simple question, guys, many of you are answering wrongly. So that does not reflect good upon your knowledge. This is very simple question. Question number 2 was very simple, but I am finding that even this has been answered wrongly by 3-4 persons. Now question number 3. Audit implies a guarantee that financial statements are free from material misstatements due to error or fraud. Now, what is the answer to this? Question number 3. Audit implies a guarantee. So you have to say whether audit is a guarantee or the auditor, whether auditor gives 100% assurance that financial statements are free from material misstatements due to error or fraud. Is it so or not? Tell me answer to question number 3. Yes. Now this almost everybody has answered it correctly. This statement is incorrect. I think you have very well understood this concept that auditor does not gives an absolute assurance. That audit is not a 100% guarantee that financial statements are free from material misstatements. Even in audited accounts, there can be errors or frauds. Although auditor employs audit procedures, he carries out audit in accordance with essays, he makes sure, he ensures that financial statements are, if there are some misstatements in financial statements due to errors or frauds, then he reports it. But even then there can be a possibility that audited accounts also contain misstatements which have not been reported. So why it is so? It is because audit risk cannot be reduced to zero due to inherent limitations of audit. Okay. So this question, I am glad that you have understood this basic funda of auditing. Well done, guys. So now we go to question number 4. The value of an information collected by an auditor reduces over time, and it is therefore necessary to strike a balance between reliability of information and its cost. Now tell whether this statement is correct or incorrect. Question number 4, yes. I think almost everybody has answered question number 3 correctly. It's almost 100%. Okay. So you are giving me a guarantee that you have understood the concept of auditing. Okay. So the value of information collected by auditor reduces over time, and it is therefore necessary to strike a balance between reliability of information and its cost. Is this statement correct or incorrect? Yes, guys. Question number 4. Is this statement correct or incorrect? Few mails by Nikita Gupta, Shreya, Alok Kumar Chaudhary, Sneha Garg, Tanya, Dhanalakshmi, Karthik, Bharat. Bharat, when you are sending answer, please write your reason also. Because if you do not know the reason, your answer has no value. Understand? Yes, what about you others, guys? Still stuck up in question number 4. Whether this statement is correct or incorrect. Yes, this statement is correct. We have done it just now. The value of information collected by an auditor reduces over time. It diminishes over time. Say the same auditor is conducting audit for 4 years, and in the information which was collected by him in first year, its value definitely gets reduced by 4th year. So it is necessary for him to strike a balance between reliability of information and cost of employing additional audit procedures. Okay, to ensure that information remains reliable. So this is the meaning of what is stated there. Okay. And now we come to number 5. Statement number 5. Audit reviews existence and operations of various controls in an entity. What is it? Whether this statement is correct or incorrect. Question number 5, yes. Deepika is asking statement is correct. So Deepika, are you asking it about question number 4 and you are not able to understand the reason? Now Deepika, I had given you an example of an auditor of a company who is auditor for a period of 4 years. Say he had collected some evidence, he had obtained some audit evidence in first year. Okay, and the same evidence is being used by him in 4th year also. So obviously some changes might have occurred, and it would be necessary for him to deploy some additional audit procedures. The information might not be that reliable as it was in the first year, because over a period of time some new factors might have come into the operation, so its reliability has reduced. So the auditor has to strike a balance between the reliability of information and its cost. So Deepika, is it understood by you? Deepika, please tell me, is it understood by you? Now question number 5. Audit reviews existence and operations of various controls in an entity. Himanshu, Isha, Ria, Jaiswal. Yes, you have answered. Now this statement is audit reviews existence and operations of various controls. This is also correct, because this is the basic function of an auditor, and it is appraisal function. It is appraisal function of an audit, because the audit reviews existence and operations of various controls of an entity. Okay. So guys, have you found the questions useful? Have you found the questions useful, guys? Please let me know. Please drop mails and send your feedback in feedback form. Yes. So guys, it is the first lecture of this subject, auditing. I have tried my best to explain it to you in very simple terms, in layman's language, so that you are able to form your own opinion regarding its nature, regarding the subject, and the basic fundamental points are clear to you in this very chapter, so that when we move on further, you do not face any trouble and you are able to attempt well in your exams. I hope that you must have found this session useful, and whatever your doubts are, please drop your mails and keep patience. Many things would get clear. like I would say, जैसे जैसे कोर्स आगे बढ़ेगा बादल छटते जाएंगे, जो भी टर्म्स आपको मुश्किल लग रही हैं वो अगले चैप्टर्स में क्लियर होती जाएंगी. So guys, do not lose heart, keep patience, and I think you would have enjoyed the lecture. Do give your feedback to help us make further improvements. Okay, thank you guys, thank you very much. Good night to all of you. Okay guys, yeah.